What's up, Mortgage Coach community? Today, I am interviewing Jasen Neuztmann out of the Seattle, Washington area. What's up, Jasen?
How you doing, Dave? Good to see you.
I'm good to see you, brother. It's been a long time since I've seen you in person.
I know.
But thanks for joining me on Zoom today.
You bet. Happy to do it.
Good. Well, hey, I have been hearing from just about every client I have that we're having absolutely record months. We're killing it with production. But along with that, I'm hearing we're having record levels of rate shopping, record levels of price exceptions. I'm talking to clients, most of my clients are over 50% of the refis have some type of PE. Like best case is less than 20%. So I just thought it'd be great to get on a call, talk to you about what can leaders do to help their sales force win when they do get shopped, and what can they do to reduce it, get shopped less.
You bet.
So before I just ask that question, for anyone who doesn't know you, if you could just tell us what market you're in, a little bit about your role.
Yeah, you bet. So I'm in the Seattle, Washington market. We've got about 13 branches in the Puget Sound area, and I oversee kind of the day-to-day for Absolute Mortgage, which is a division of Finance of America. And so, yeah, record months, like you said, but it's like a shark tank out there, right? You've got trigger leads, you've got servicers that are going after the client the second they get the payoff demand. And so we're seeing a hyper competitive price environment, just like everybody that's listening to this, no doubt. And I think one of the keys is to really understand we always have and always will be a value shop, a differentiation model, and we're trying to provide trusted advice. And I think a lot of originators make the mistake, and most of our competitors, by the way, in our markets are similar. I mean, we're not online lenders or consumer direct lenders. We're in the local market, brick and mortar, providing quality advice. And I think a lot of loan officers make the mistake of thinking that they can compete on a price standpoint, a cost leadership strategy, without doing anything different, with just putting out a fee sheet or just putting out whatever, Excel spreadsheet or simple product they use to demonstrate the refinance solution to the client. So it really makes it imperative, how are we differentiating ourselves to justify the fact that we are going to be a little bit more expensive? I mean, that's just the model, but we've got to do something to earn that. And that's where I think we've been successful at really integrating the total cost analysis as a course of business, just kind of how we do business.
Well, and I've had so many branch managers ask for my help. I've had a couple of regionals lately say, Dave, I get it. I need help. So just to summarize, you've got 13 branches that you're leading. About how many loan officers in your region?
I think our head count now is probably around 70 or so.
About 70?
Yeah.
And I know 2 straight years I've interviewed you where you compared, certain number of loan officers that use Mortgage Coach versus those that don't. And I think one year you found that those that do were 8 basis points more profitable, and the other year they were like 9 basis points.
Yep, 8 to 9. And it was amazing to me how consistent it was, right? And what I did, I didn't try to stack the deck here. I really tried to pull an originator group with similar volume that used it as a TCA as a regular course of business, and a group that hasn't implemented it yet, but are good quality originators, right? I wasn't picking the people that I know are always getting shopped or anything like that. And it was steady, that 8 to 9 basis points, which when you extrapolate that out over a region, and over the last 12 months, we've done about just over $1 billion in loan volume. That is a massive, massive number. And of course, it's not 9 basis points on a PE on every loan. It's 0, and then there's 25, and then there's a 50 and whatever. But that was the average savings for the originators that used Mortgage Coach over time.
Beautiful. So for anyone listening to this, a lot is at stake. Like, not only is there basis points and reduced price exceptions, I'm sure there are some loans at loss. Because let's face it, when you get in that rate shopping battle, you don't always win.
No.
And so that's just part of the difference. We don't know about all the loans that didn't convert because they weren't given the best experience. So let's get tactical about it. Describe what leadership are you bringing to your branch managers, and then what are they bringing to their loan officers to go from, hey, this is a good idea, to we're creating culture and we're creating adoption around using a total cost analysis.
So I've learned from years of management that it's really hard to change human behavior, right? I mean, it is very, very difficult. And so, you know, the old saying, you got to use a carrot or a stick, right? And so we've tried to err on the carrot side of the equation as often as we can. And so what we've been doing now for over a year, and we actually started this in, I think it was April or May of last year, we agreed to give our originators an automatic price concession out of the gate on every single refinance where they provided a total cost analysis and proof of delivery to the consumer. So we have a centralized email box for price concessions. They send an email, they attach the TCA or the email that shows the TCA was sent to the borrower, and that gave them an automatic price concession on their refinances. And that immediately forced adoption because nobody wanted to leave that money on the table. And to your point, we don't know how many, we can't prove a negative. We don't know how many loans we're losing. And so for me, looking at the P&L, it was an easy decision to give a little bit on the front to increase our conversion rate and to force adoption so that when this refinance market goes away, hopefully we've now created new habits around just delivering a TCA. So they're going to win more purchase volume. They're going to create more powerful relationships with realtors and on and on.
Got it. So just to make sure I'm clear on that, anybody listening to this, there is a preference given that if you want a price exception, you got an auto approval if you prove that you delivered a TCA.
That's right.
Now, if you didn't, how do you talk through that? You know, how does the branch manager talk through that with the loan officer? And then I'm also going to want to get into that negotiation. It's like, okay, the exception came in. How do we coach and train the loan officer to negotiate with a TCA?
For sure. So what we would do in most cases is the first time, you know, they get a pass, but I would then condition your next price. I'm going to approve this one. Your next price exception that comes in the door, if it does not have a TCA attached, will be a no. And so you better get it right. And that moves the needle. I mean, it's just a matter of creating those new habits, right? So, and then once they get a few under their belt, then they realize the value of it. So again, we don't want to turn the business away. We don't want to be punitive with them, but I have had cases where they have not done it on a subsequent transaction. And I've said no, because if we continue to approve them, then they just think it's free lunch, right? So that's how we've navigated through that.
Now let's face it. When you do that, you do explain a why. Like you have a 1 to 2 minute leadership why. Do you mind just giving us your 1 to 2 minute mortgage coach TCA why, as though you're giving it to a branch manager or a loan officer?
Yeah. So I mean, and I go back to, you know, my own production career where, you know, I've been using mortgage coach for what, 15 years, or I don't even know how long now. Back to the early versions of it, right, on the stone tablet or whatever it was. But you know, so I can draw on my own experience, and again, to go back to that, there's basically two business strategies. There's cost leadership or differentiation. You got to pick one, right? And if you're going to be in an independent mortgage banking model, you better go with differentiation, or you're just going to be more expensive. So you've got to provide value and lasting relationships. And so one of the things that I've done in the past, because I'd still get shopped. I mean, I would always push that TCA out first, but I'd still get shopped, like we all do. And so when that client would come back to me with a competitive quote, and I'd explain this to the branch manager, I'd put that competitive quote on my TCA and then go back to the consumer and ask them, is the value of my advice over time worth this difference in price to you? And I would win many times. Sometimes I wouldn't. Sometimes they'd say no. But by the way, it's hard to look somebody in the eye and tell them that their advice is not worth something, right? So it's sometimes they'd say no, but I would win business that we would otherwise lose. And I've also solicited my sales force when they have that situation happen to send me that example so I can blast it out to the entire team and say, hey, Willie in my Auburn branch just won a deal with a TCA where he was $3,500 off. And so we're constantly trying to reinforce those with those examples of where we've had wins. But again, it comes down to the biggest mistake originators make is to think that they can have a higher comp plan, have a higher rate sheet, and push out the same product as an online lender, big bank, you know, consumer direct model, and somehow think they're supposed to win that business. If you don't create advice, you don't deserve to be paid more. I mean, trusted advice. It just isn't, the consumer shouldn't pay a premium for the same product.
So I want to create a checklist now for every branch manager listening to this. Over the next few minutes, we're going to create a checklist, and you can write it down and like, here's your 3 steps to doing it. But before they do that, I want to just get everybody's visual bearing on something. I want you to put yourself in the mind of a consumer, and this is the deliverable you get from a loan officer. By the way, this was from an interview I did with Brian Morley, $100 million producer with Fulton Bank out of the East Coast. He recently shopped 6 lenders, and these are this is what he got. One of them was an email with a logo. One of them was a PDF with a logo. Some of them had no logos. They were just disclosures, but they all had one thing in common. They had a rate, payment, and cash to close. A transaction that's easy to shop. So I also want to pull from the last time I did this interview with you. It was in March of 2019. And this was just after the second time Jasen had done the case study and really proved that a mortgage coach loan officer has a better conversion. So I'm going to put a link to this article down below so you have it as a reference as it goes to training. And within this link, we actually walk through a specific TCA, a total cost analysis. This is the actual total cost analysis in that article. So Jasen, let's go through how we would train and coach a loan officer to now you've delivered the TCA, you get shopped. It looks like we were presenting a 15-year loan. The online lender had 0.3% better. Coach a loan officer now on how to have the conversation with the family. And anything you want to call out in this TCA?
Yeah, you bet. So again, I think one of the mistakes a loan officer will make when they get shopped out of the gate is they'll just go to their manager and ask for the entire delta in the pricing as a price exception. I mean, that's just the default mode, right? So even in the event they have delivered a TCA, they're just going to go ask for the full amount. What I would do is I would just, as we've done here, I took the online lender quote, I put it on there, and you go back and have the conversation like this to say, so Dave, I understand that you obviously want to get the best rate that you can and the best deal for your family, and that's important to you. Obviously, part of what we're trying to do here is to educate you about the mortgage solutions that will help you achieve your financial goals over time. And so we're providing you with advice to illustrate over time what each mortgage option translates to. In this case, you can see that for about $50 a month difference in payment, and that equates to, over the next 5 years, about $2,800 in total interest paid. What I'm going to ask you is, having the benefit of a local mortgage professional who's here to educate you about mortgage solutions and your financial goals over time, is my advice worth $2,800 over the next 60 months to you? And then just be quiet and let them talk.
And I wanted to just call out, did you notice how he asked the question? The only edit to that is I would call it the exact number. And in this particular case study, it's $2,829. Like, specific numbers matter. And it just is $2,829 worth my advice.
And they can say no. I mean, that's fine. That's an okay answer, and then you move on. Right. But at least they've been posed the question, and most people understand. I mean, they can think of other examples in their life where they pay premium for customer service or quality of product, right? Everybody does it. It's a question of where. Not everybody looks for the cheapest thing in every, consumer good that they purchase. So they're familiar with the concept of paying for value and paying for advice in this case. They just need to have it contextualized for them.
So if I recall, when we did the last interview, you said that almost the majority of the time, let's just say 70% of the time, when it's less than $5,000 over 5 years, you maintain the deal without an exception. And the majority of time when it was over $5,000 over 5 years, you're doing an exception, but it's now a fractional exception. It's no longer the full amount. Could you kind of walk us through that dance and that negotiation with the client on how to negotiate dollars versus rates? How does that sound?
Yeah, I mean, and that's a pretty accurate estimate. I mean, I think the most I ever had a client sign off on was around $7,000 as a delta in the pricing. And so, look, if somebody came back and I can't actually recall when I've asked that question directly, I don't know that anybody's actually looked me in the eye and said, no, your advice isn't worth that. I think what they did is they'd say, well, let me think about it. And then I just couldn't get them back on the phone, quite frankly, because people, they don't want to look you in the eye and say, no, you're not worth that, Dave or Jason, So, but what I would do is I would say, well, then tell me what my advice is worth to you. I mean, just lay it out there. I mean, is it worth nothing? Well, no, I mean, it's closer to $2,000. I could probably do it. Say, well, you know what? If that's what you think my advice is worth, then let me see what I can work out for you. And maybe I'd come back at 2,000 or a little bit higher, but it does at least minimize the difference. Or maybe we look at an eighth in rate. That's another strategy when managers, you're getting approached by loan officers for price exceptions. Don't fall into the trap of I have to match. Like that's flawed logic. You don't have to match. You have to get to the point where your advice is justified by the difference. And so I'll go back a lot of times if we're off 3/8 in rate and they can't sell it, I'll say, hey, you know what? We'll go bump it up an eighth in rate and see if you can sell that. Try to meet somewhere in the middle so we can minimize the overall cost. And I will say that when I look at our pricing exceptions as a whole, even though we're in a much more competitive market, I believe it was in 2018 and 19, our division had been right around an average of 15 to 16 basis points in price exceptions. I just ran a trailing 90-day over about a week ago, and we were up to about 19 basis points in price exception over the entire volume. So even though we're in a more competitive market, we haven't seen our price exceptions go up all that much. And I believe that's a testament to the fact that for a year plus now, we've been incentivizing our team to use Mortgage Coach to deliver the TCA, and that's reduced the amount of damage and amount of hits we've taken.
And I know a lot of companies that are over 30 basis points. I know over 50 basis points. And guys, I know that everybody has different pricing strategies, so we can't, we're not comparing apples to oranges. But I do know this. I do know that Jasen is a great Mortgage Coach leader. He used Mortgage Coach very effectively as a top producing loan officer. And now he's, managing a region of 13 branch managers, 70-ish loan officers, and they have created cultural adoption. So let's go through the checklist. So if you're a branch manager, here is the checklist I want you to write down. And I'm going to start with the bottom. Did you notice he talked about celebrating success stories? So when you do have a loan officer that maintained a deal, one with a rate shopper, you celebrate that. You forward that, you share it with folks. At the top, it sounds like consider having some type of an incentive so that, hey, if you use Mortgage Coach and you want a price exception, it's going to be a lot easier for you. So that's checklist number one. Sounds like checklist number two is when they come to you, you are always asking them, well, show me the TCA. And if they don't have it, you're having a coaching session. Would that be fair enough to say?
Mm-hmm. Yeah. And one other thing I'll add on the coaching session, the biggest differentiator I've seen with loan officer success is simply their confidence, right? Loan officers that aren't confident lose business. Loan officers that approach a deal confidently win business. And the way you instill confidence into the originator is by getting them to adopt a TCA so they can feel good about the fact that, yeah, I am more expensive, but I'm worth it. And so that empowers them to feel that they're worth it and justify that higher cost.
I love what you just said, because that is so true, that when you're a Mortgage Coach loan officer, you're delivering more in a fee worksheet, it comes with a greater level of confidence. Now, I do know top producers that are confident about, hey, I close a lot of loans and I kill it. But trust me, when they go from I'm a fee worksheet doing a lot of business to I'm a total cost analysis, there's just a whole new level of confidence that my advice has tangible value. So I love that. So number one, have some policies that make it favorite. Two, when they come to you, have a coaching session. Three, do some actual training and role playing. And then it sounds like number four, it's really 4 steps, celebrate the successes. Am I missing anything?
No, I think that's it. And I think it is really worth it. I'll say to, regionals, branch managers, at some level you're getting paid on profitability more likely than not. So there's going to be some hesitation to just put money on the table, but I can speak from experience. It is worth it. because as you create these habits and these best practices, and those then they'll last beyond the incentive period, and they're just that big unknown of how many loans did we just never get because we didn't go to the table with the best presentation and the best tools. How many loans do we just lose? We can't prove it, but we know it's there, and it's not insignificant.
So I'm going to give another homework assignment to everyone watching this who wants to, I don't know, institutionalize advice, and we are the premium player. So I did an interview yesterday, co-hosted it with Todd Duncan. We interviewed Clay Ebert, starts with an H, but I got to get trained on Ebert. And I could go on with this guy's resume. He was incredible, but he talked about how we introduce ourselves. And it really came down to, how do we frame ourselves? Am I a loan officer that closes loans on time and has great rates? If that's how you frame yourself, it's going to be one thing. And then he had all kinds of quotes. I'm probably not going to be able to pull up a Kelly Zitlow one. There was, Denise Donahue. Now, I'm not going to try to go through this and wing it, but he showed Denise Donahue, Josh Metal, Mortgage Coach Walk Stars, how they position themselves and how they frame themselves is different. And then they all have case studies, stories, where they could say, I help families achieve the American dream. I help families build wealth with real estate. And then they can tell a story of a family where their advice made a difference. And so, guys, that's where it's at, is to train an army of local advisors that position themselves differently than every other loan officer. Listen to this interview, link down below, how to position yourself in 6 words or less as more than a loan officer, and then how to tell stories around how you help people through your advice. So I think it's all of that. I'm going to put that in the checklist also, because if you do not train your loan officers to have these conversations, position themselves differently, tell stories around creating advice. And then here's the deal, guys. Every time a family gets into debt, they need to think of it differently. They need to go beyond the mortgage transaction. And here's the other step. Like, this is not necessarily the step for, let's just say, rate shoppers. But when a family gets into debt, they should always get options, because if you're not giving them options and they didn't pick the option, they don't have the same level of ownership. So options are important. You need to show them options over time that matters. So I know Jason likes to get into that over 5 years, but heck, if this is a family's forever home, maybe it's 7 years. And if this is a military family who's going to be moving within 2 to 3 years, maybe it's not 5 years, it's 2 years. And then that number is even smaller. And then always show strategies how to pay off the home faster. So with refis, if you're doing refis and you're not saying, hey, let's take that monthly savings and prepay the mortgage. Like, here's an example where prepaying the mortgage is going to help that family pay off the house 5 years or faster. If you're not showing that, if you're not doing these 3 essentials with every single family, here's the deal. You are going to get rate shop more. You are a commodity. You are just a rate and a payment. But if you're showing options, you're showing them over time, you're showing strategies to pay off the debt faster, you're going to get in that rate shopping battle less often. You align with that?
Yeah, and 2 things I'll touch on. One thing I did through my entire career is on a refinance, I always added a product that I called a same payment refi. And to your point, I just took the principal savings, threw it back on the loan, and showed them how much faster they can pay off. Because a big objection people have to refinancing is they don't want to restart the clock. So whether they say it or not, you're getting in front of an objection before they can make it. And then to the point of the timing, I would always ask in my initial interview, what's your estimate of how long you think you're going to be in this house? And they'll give you a range. And say they say 5 to 7 years. I'd set my short term at 5 years, my long term at 7 years. It sends a subtle clue that you've actively listened to them, and it'll be reinforced when they get the TCA. And it's simple, it's easy, and one question, right?
Love it. So as you're making this checklist, make sure you're teaching your loan officers option selling. Make sure you're teaching them, ask how long they're going to be in the home. And then make sure if it is a refi, we're doing the same payment, how to reduce your term. So guys, we've given you a lot to think about, but here's the deal. If you listen to this, if you as a branch manager or a regional master this, 9 to 10 basis points more in profit, more conversion, and then I think most of all, more confidence. The more confidence we can give our sales force, the better retention we'll have, the better we'll be able to recruit. Just the whole business goes better. So Jason, any last words of wisdom before we wrap up this interview?
No, again, I would just say the only way that you're going to move the needle with your originators to enforce adoption of tools like Mortgage Coach, again, it's a carrot or the stick. You either require it and you tell them you're going to fire them if they don't do it, which is not the preferred option, or you tell them in order to get a price exception, you got to deliver one. And it's been highly successful. But if you think you can just tell them it's such a great idea, it's not enough. It's really hard to change human behavior. I mean, I'm so convinced of that. So you've got to come up with a way to make it matter.
Well, managers and leaders, that's one of the reasons why I consider one of my 3 most important jobs I do as leader of Mortgage Coach is to interview people and to have a YouTube channel where I'm constantly finding success stories. I'm interviewing them, trying to keep them under 20 minutes, aside from my Tuesday call, and make them valuable. So if your loan officers are not tuned into the Mortgage Coach YouTube channel, if they are not part of the Mortgage Coach Facebook group, you're also missing a resource. Like the more you can get them tuned into our channel as a place of personal development, we're here to help you guys make change together. Because to your point, it's not easy. It just requires reminders. It requires sharing success stories. And then it requires never giving up, doing this over months, weeks, and years. So Jason, thank you, dude. I appreciate your time for the Mortgage Coach community, man.
Happy to do it, Dave. Good to see you.
Have a good day, everybody.
All right.
Hey, one last thought for everybody listening to this. If you're a branch manager, sit down, have a branch managers meeting over this, create your own branch checklist. Hopefully you got value. Give it a like, share it with your team. Take care, everybody.